Hey everyone, it's Mark Ferguson with Invest for More. We're back with another real estate video. Today we're talking about foreclosures. So there's been a lot of news lately about foreclosures increasing. With interest rates going up and maybe a recession coming, there could be more foreclosures. And if foreclosures will cause another housing market crash or correction or decline in any way. So I'm going to talk about foreclosures, talk about current activity, how that looks like compared to the most recent past we have, and even going back a little farther. And we'll talk about a little bit about what foreclosures are, how they work, and how long it takes to complete a foreclosure as well, which is very important in this discussion as well. Now, I have a very deep respect and connection to foreclosures. I've sold somewhere between 500 and 1,000 of them as a real estate agent. I was a HUD listing broker. I sold foreclosures for 40 to 50 banks during the last housing crash, and was very in tune with how foreclosures work, how the banks work, the market, how all of that works. As a member of the NRBA, the National REO Brokers Association, US REO Partners, all kinds of different groups. I went to conferences, I spoke at conferences, I did training for HUD, I did continuing education classes for the state of Colorado on HUD and foreclosures. So I'm very in tune with how foreclosures work and how they might be affecting the current real estate market. Now, having said that, I haven't sold a foreclosure in years because there simply haven't been any, especially in Colorado. And I've been focusing on my own investing, my own brokerage, things like that. But we'll talk about what's going on now, if it's something to worry about, and what the numbers actually say. All right, we love the likes, love the shares, love the comments. Keep those coming, and love seeing new subscribers as well. And if you're new to my channel, I don't just talk about real estate trends and what's going on in the housing market, but I show all my own properties too. So we've got 13 flips going on that are multifamily, single family, commercial properties. Have almost 40 rental properties that are the same: multifamily, commercial, single family, small businesses, a liquor store, mini mart, all kinds of stuff going on. So check those out. I have those videos as well. All right, so lately I hear a lot about foreclosure activity increasing, how it sets records for the post-pandemic foreclosures. And we're going to look at what that really means, if that's really important or not. And right now I'm on adamdata.com, which is actually an amazing website with really cool data on foreclosures. The only downside to this website is you have to pay for a lot of the data, but they do post articles and snippets of that data for free for everyone to see, and that's what I'm on right now. But if you really want to get all of the reports and everything, you have to pay for it, which I don't do, so I look at snippets like this. And I want to show you real quick kind of what foreclosure data looks like right now. And this article talks about how there were 33,333 properties with foreclosure filings in March. Again, foreclosure data doesn't happen, like if you don't get that data the week or month before it happens, sometimes it's backtracked to kind of get all that data. That's just the nature of the beast, because reporting it and finding that data takes some time. That was an interesting number, all threes. And it says that's up 29% from the previous month and 181% from a year ago. And you hear those headlines and you automatically think, oh man, here we go again. Foreclosures are coming up. The market's going to be crazy. We're going to have all these defaults. Maybe the market will crash. Who knows? But when you really look at the data on what's happening, here's what we see. This is the U.S. foreclosure starts going back to 2005. Hopefully you can see that quarter two, 2005, over 100,000. And you just noticed we said there were 33,000. So we're still below like pre-crash levels, right? And I wish this chart went back farther, and maybe I'll be able to find a better one. But you can see what happened in the housing crash. It was crazy. That's why we had such massive price drops, so much inventory, so many things going on, because there were just massive amounts of foreclosures. Literally almost, not quite, almost 10 times the amount of foreclosures in 2009 than we have now, and now set a post-pandemic record. And what they're talking about is, you can see this chart, things got better. 2014, things settled down. Market was very strong, doing very well. You can see we're below foreclosure starts for back here. And then COVID hit, and boom, what happened? The government stopped foreclosures, did a moratorium. No more foreclosures are allowed. They still let a few trickle through who were maybe private banks, not government-sponsored foreclosures, maybe commercial foreclosures. So weren't able to stop every single one, but they stopped most of them. And now they're saying there's a record post-pandemic. And what that means is, since they stopped foreclosures, you can see right here, we have a record amount, which is still half or less than half of what a really low amount of foreclosures is. So even though the foreclosure moratorium ended, the eviction moratorium ended, all that was done, foreclosure starts are still way below normal, way, way, way below. And this isn't completed foreclosures. This isn't something that happens way off into the future, where we will talk about that soon. This is starts. When you can start a foreclosure, you can start a foreclosure now. There's really nothing holding you back. And literally, there's almost none compared to historically what we have had. So people who are saying foreclosures are at record numbers, what they mean is since the pandemic, when they stopped foreclosures. But compared to historic averages, we still are way, 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 way below. And just to give you an idea, 33,000 foreclosures. Well, there's about 1 million homes listed for sale in the United States right now. And that includes houses under contract, new construction houses, pending listings, and that would be 1/70th of that amount of listings are currently in foreclosure. And assuming those all go to foreclosure, it would make just a tiny little trickle on the entire housing market in general. So nothing too crazy to worry about right now. But here's something else I want to talk about real quick is what exactly is a foreclosure? What does this mean? Well, a foreclosure is when someone stops making their payments, right? The bank can start proceeds depending on the state, right, with a trustee or the courts or the sheriff to take possession of the home. So different states have different rules. People have to be behind a certain amount in some states, other amounts in other states, and it's all kind of different depending on what state you live in. But a foreclosure is when the bank actually takes possession of the home. So for a foreclosure start means they've started that process, right? They've said, okay, you're behind 3 payments or 4 payments or 5 payments. We're starting the foreclosure. We're going to go through this process of trying to take this house back unless you catch up or do a short sale or a loan modification or something else to make this right. And if we go through this entire process, at a certain point down in the future, we'll take possession of the home, and that will be an actual foreclosure. When the bank takes possession of the home is when the actual foreclosure happens. It usually goes through a public sale where they give people a chance to bid on it. The owner of the home has a chance to pay off all the money, bid on it as well, take the home back, and that's what a foreclosure is. So you may hear the term short sale. Short sale is when a person is behind on their payments, usually behind on their payments, not always, but they sell the home and owe more to the bank than what they're able to sell it for. So they have to ask the bank permission to sell it for less. That's a short sale. That's different than foreclosure. Foreclosure is the process of the bank taking this home back, gaining possession of the home, and then once they get it back, they usually sell it as an REO. And REO stands for real estate owned, and that's what I sold was HUD homes, REOs, after the bank took possession of these foreclosures. And that's when people tend to think, oh, they'll sell them for pennies on the dollar, it'll crash the market. Well, they really don't sell them for pennies on the dollar. The bank wants to make as much money as they can because they want to pay back their shareholders. They want to, stay afloat. So even once it goes through foreclosure, doesn't mean it's going to crash the market. And every single market throughout the history of the world has had some foreclosures, right? Every healthy market has a balance of, sales, buyers, and then some people lose their home to foreclosure, unfortunately. Job losses, sicknesses, deaths, you never know what could happen. But there are always some foreclosures. So just because there's some foreclosures or an increase doesn't mean the sky is falling and the world is ending. It actually might mean we're returning to more of a healthy market instead of the crazy 2021-2020 market we have had. So now here's something else I want to talk about that is very important and tied to this. So if we go down through this article, it has a ton of great information on it, and I'll try and link to it below, but you can see it up here. U.S. properties with foreclosure filings really shows us the exact same picture we just saw. Almost all of them stopped, and then we've seen a slow uptick, but still nowhere even close to what normal was before. U.S. completed foreclosures, REOs, what I was just talking about. Here you can see these are houses that actually went through foreclosure. And here we can kind of see the normal market before the crash and how many REOs there were. Then we saw this massive increase, right? Slow decrease, little bit of an increase here in 15. and then another decrease, and then boom, nothing. Almost no houses are actually going through foreclosure even after the foreclosure is started. And what that means is houses are either being sold before the foreclosure is completed, they have short sales, they have loan modifications, people catch up. Whatever they can do to keep their house or sell it, they're doing. They're not letting the bank take it. And you can see this tiny amount of foreclosures here compared to normal. And we're seeing that in our market, and almost every market is seeing the same thing, where there just aren't foreclosures coming up for sale. And why is that happening? Why is this number so low? Well, this next chart will tell you something about that. Average days to complete a foreclosure. This is one of my craziest charts I like to show people. 2007, and these dates are all kind of different. Looking at these, I don't know why. 2005, 2006, 2007, or maybe that's 2005. That's 2005, sorry. So back before the last crash, and this is actually during the crash, you can see this is probably about 150, and it was actually a little bit lower than that before the crash. It took, less than 6 months to complete a foreclosure across the country, which seems logical to most people. You get behind on your payments, the foreclosure process starts, you complete the process, the house goes back to the bank. Well, over time, what we saw was this gradual increase during the housing crash. And what that was the government was stepping in and saying, hey, we don't like these foreclosures. We think they're hurting the economy. What can we do to prevent them? And they started putting pressure on banks to do loan modifications, saying, hey, you really shouldn't complete a foreclosure unless you've gone through this process of seeing if the borrower can do a loan modification. Can they, catch up and re-amortize the loan? Can we lower the interest rate? Can we do something to keep them in their home? And then they said, okay, maybe that doesn't work. Now, we don't want it to go to foreclosure still. Can they do a short sale? So we want you to go through these process of doing a short sale so you don't go to foreclosure. Now, the government couldn't say, you just can't do foreclosures, but they can put pressure on them in different ways and have different regulations for the banks to follow and kind of coerce them to do these things. And you can see the time kept rising and kept rising and kept rising. And then we saw these massive jumps in times to foreclose, some drops, some jumps. And what we're seeing is at a certain point, with all this talk of investors and real estate, banks don't want to foreclose on anyone, right? It gives them a really bad name. Nobody wants to say they foreclosed on people. The political environment right now is very anti-real estate, which is crazy in another discussion. But banks don't want to be known as somebody who foreclosed on anyone. It gives them very bad PR. And they want to do short sales. They want to do loan modifications. They even want to sell those loans to somebody else at a massive discount instead of being the person who forecloses on people. And so that's why you see this incredible trend here of going from 150 some days to over 1,000 for a little bit there. Now it's back down to 917 days is the average day to complete a foreclosure. And I have a lot of people tell me, oh, that's not true. In Michigan, we can complete a foreclosure in 100 days. You know what? I'm in Colorado. In Colorado, you can complete a foreclosure, I think, in 120 days, 250 days. You can complete it that fast if everything goes perfect. This is reality, what is actually happening in real life. Adam Data tracks this data to see what time it takes from the time the foreclosure is started to the time it's completed, and takes those numbers and compiles this data. So yes, you can complete a foreclosure faster than this, but it's not happening in real life. This is what is happening in real life. It's taking 2.5 to 3 years in some cases to complete a foreclosure. So even if we have massive amounts of foreclosures coming on the market, which we saw, we don't have, but even if we did, it would take years for those foreclosures to actually make it to the market. Now, some will trickle in sooner, but some will trickle in way, way later as well. And a lot of this depends on the state you're in, but this is something to really pay attention to. Even with massive foreclosures, it will take years for us to actually see those in the housing market and see those impact the housing market. Okay, and the last thing I want to talk about is forbearance, right? That's something a lot of people say, hey, all these people are in forbearance, they're all going into foreclosure, they're going to crash the housing market as well. Well, what's really happening with forbearance? Let's take a look. Forbearance rate continued to drop in May. Share of loans in forbearance dropped by 9 basis points to 0.75%. Less than 1% of loans right now are in forbearance. And how many loans is that? Well, if we go down here and we see 425,000 homeowners were in forbearance plans, right? That number was, I believe it was 5 or 6 million in 2020. So we saw all these people go into forbearance in 2020 from COVID. A lot of them went into forbearance without, because they lost their job, or they thought they're going to lose their job, or they thought they're going to lose their income. They didn't even need to go into forbearance. They did it. They entered the plan, and then they figured, oh, things aren't as bad as I thought. I still have my job. They left forbearance. And right now you can see it is such a small number, 425,000 homeowners in forbearance plans, that is basically not going to impact us at all. Maybe just a tiny bit. And what you can see is 28% of forbearance plans were in the initial plan stage, and 58% were in a forbearance extension. 13% represent forbearance reentries. So maybe 13% were already in forbearance. They're going back into forbearance. Maybe they're in some trouble, right? Past the initial plan stage, 58%, they've been in forbearance, they're working on it, and then 28% are new. Again, this is such a small number. This is the entire forbearance program in the entire country. And usually in a healthy market, I think we saw 6 million houses sell last year in the United States. Even if all of these go into foreclosure, all of them, well, first off, we know it's going to take 2 to 3 years for them to get through the foreclosure process. And then they're going to be 10 to 20% of the market if all of them go into foreclosure, which from what we've seen, most of the people in forbearance are exiting on good terms, don't have an issue, and they're not going into foreclosure. So this talk of forbearance really to me is a non-issue. This talk of massive foreclosure increases is a non-issue because it's so small compared to normal. And even if we do have all these foreclosures and we have massive amounts of foreclosures come in later in this year, it's going to take years for those to hit the market. So if we do see an influx of REOs, foreclosures, short sales, it's going to be a long time before they impact the market. Honestly, I don't see them impacting the market very much because we saw those foreclosure starts were much higher than the completions. Because if you do get into trouble, you do go to foreclosure. Right now, most people have equity. They can sell their house. They don't have to just let it go and lose it. They can sell their home. So it's not a big issue for most people. Foreclosures are not a big issue to me. And this is somebody coming from someone who sold a whole lot of foreclosures, made a whole lot of money selling foreclosures in the last crash. And a lot of kind of the groups I belong to, some of my colleagues, friends, people I know, have been trying to predict more foreclosures are coming for years and years. I think because, that makes them money and they want more business and they want to sell those houses. But I just don't see it coming. I don't see foreclosures being a big deal. Yes, they will increase. Yes, we'll see them become a slightly bigger share of the market, but every normal market has that. We should have some foreclosures in every market. It shouldn't be non-existent like it has been the past couple of years. All right, thanks for watching. Let me know what you think. Love to hear your thoughts on this subject. Of course, we love the likes, shares, comments, and new subscribers. Keep that coming as well. We'll have more videos like this coming up, and like I said, more videos of my actual properties too that we're buying, selling, rehabbing, managing, all that good stuff as well. Take care. We'll be back soon.